Welcome to Akib TJ. Guys, will the United States raise interest rates again? And if it does, what happens to your money, your loans, and the entire economy? Is another rate hike coming? And what does it mean for everyday Americans? Let's break it down. The U.S. Central Bank, known as the Federal Reserve, raises interest rates when inflation stays too high. Its main goal is to slow down spending and borrowing so prices stop rising too fast. Over the last few years, the Fed aggressively increased rates to fight inflation. These hikes made borrowing more expensive, whether it's for homes, cars, or business loans. Mortgage rates may rise, making homes less affordable. Car loans and credit card interest rates may increase. Businesses may delay expansion because loans cost more. This leads to slower consumer spending, because people and businesses borrow less. And when spending slows, economic growth weakens. That may sound bad, but the Fed actually wants slower growth, because slower demand helps bring inflation down. However, there's a downside. If rates stay high for too long, companies may cut hiring or reduce investment. That can increase unemployment and slow wage growth. Higher rates also impact the stock market. When borrowing costs rise, corporate profits may shrink, and investors become cautious. That can put pressure on stocks, especially in growth sectors like technology. Will the U.S. hike rates again? Possibly, but only if inflation refuses to cool. And if it happens, Americans could face higher borrowing costs, slower growth, and weaker markets in the short term. But in the long run, the goal is to restore price stability and build a healthier economy. The Federal Reserve's next move could shape the future of inflation, jobs, and growth, so the whole world is watching. What do you think? Should the Fed raise rates again, or pause to protect growth? Let us know in the comments, and don't forget to subscribe.